So, Wall Street took a bit of a breather on Monday, pulling back from last week's big rally that was all about rate cut hopes. Investors are now shifting their focus to the week ahead, with Nvidia earnings sitting right at the center of the spotlight. Hey everyone, it's Tuesday morning, August 26th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Quick note before we dive in. Today's episode is brought to you by AMF Capital Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. The Dow dropped more than 300 points, or about 0.8%, after finishing Friday at its very first record high of 2025. The Standard & Poor's 500 slipped about 0.4%, and the Nasdaq ended down 0.2% after trimming earlier gains. So, after last week's fireworks, the mood yesterday was a bit more cautious. Just to rewind. On Friday, the Dow surged more than 800 points, or 1.8%, to close at over 45,600. That marked its first ever record close of the year. The rally came after Fed Chair Jerome Powell suggested that rate cuts could actually start as early as September, and that really lit a fire under the market. But now, earnings are back in the driver's seat and everyone's eyes are on Nvidia. It's the most valuable stock in the Standard & Poor's 500, and it reports after the closing bell on Wednesday. Analysts are expecting earnings of about $1.01 per share on revenue just over $46 billion. Price targets have been creeping higher, with optimism that demand for AI hardware isn't slowing down anytime soon. Nvidia shares are already on an incredible run this year, up 32% so far and almost doubling since April's lows. This week's report is being called a litmus test, not just for Nvidia, but for the broader tech space. Investors are watching closely to see if there's enough momentum to keep pushing higher or if we might see a rotation out of tech. And it's not just Nvidia. Dell and Marvell Technology are set to report Thursday. Looking ahead, Friday's July PCE inflation report is also going to be key. That's the Fed's favorite inflation gauge, and economists expect core PCE to rise 2.9% year over year, a little hotter than June's 2.8%. If that plays out, it could add another wrinkle to the September rate cut debate. That's where things stand. A pause after last week's surge, with Nvidia and inflation data setting the stage for what comes next. All right, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.